you can give us some brief overview of who you are and especially why you're excited about Bitcoin.
Sure. My name is Cedric Youngelman. I'm the host of the Bitcoin Matrix podcast and Bitcoin Center. I'm co-host of Bitcoin Center with Paul Tarantino. That's live Tuesdays at 8 p.m. Eastern. And why am I excited about Bitcoin? Well, I'm excited about separating money from state from money. I think that's been a terrible combination for most citizens around the world. And I think it's also the best way to have something that can't be debased. And it's a great anchor for, I think, people to think about how to protect their wealth, or a life raft, if you will. So quickly, that's some of the reasons I'm excited about Bitcoin. I think it's the most important thing in the world. So I think
super interesting.
No,
super
I'm
interesting
sorry.
because you said in the beginning before we started recording that you're kind of annoyed on this like Bitcoin Treasury companies, because I think that's exactly the reason where I feel like it's a distraction, because there's all those things why we're excited about Bitcoin and why we got into Bitcoin. Maybe not like if I'm totally honest, I got into Bitcoin because of the gains, but I stayed and then got deeper into Bitcoin because of exactly the reasons that you lined out. So I feel like there's a big value to just like the number graph technology. But I hear you a lot with being like kind of annoyed at this distraction of the Bitcoin Treasury companies, and when you said like you're excited about this, and like I thought about Bitcoin Treasury companies, kind of a distraction to that.
It's a major distraction. I'm excited about them from a finance and economics perspective, and how they're going to hopefully eat traditional finance. But I think it's a distraction from all the things that make Bitcoin. Because Bitcoin treasury companies, they centralize their Bitcoin. You're not holding the Bitcoin. You don't have any real true claim on it other than as a shareholder and you're last in line. It's not about self-custody. It's not about using Bitcoin as a currency or a medium exchange. It's not about improving Bitcoin's privacy or, personal security, or just even, layer one security. So I think it's a big distraction from the bigger issues in Bitcoin. And I think it's also potentially a great way for the state to capture Bitcoin, I guess in quotes, or literally seize Bitcoin, confiscate Bitcoin in the future. So while I think it's exciting from the financialization of Bitcoin, I wish those other topics wouldn't be so suffocated in this environment. And I think it also brings a lot of people to Bitcoin. It's great. Bitcoin's for everyone. But it brings a lot of people, I think, to Bitcoin who really see it as a get rich quick scheme and something they could trade and flip. So in that regard, it's not really, it's any education, there's no bad publicity. But I don't think it's the best necessarily like on ramp for Bitcoin education.
Yeah, there's this thing where everything is good for Bitcoin, but also even Satoshi was very concerned about how we grow this thing, and he was cautious about not making it too big too fast because it can be captured. And I'm kind of wondering, because I do see the positive and the negative side of treasury companies, and I think it's kind of coming anyway, so like we can comment on it, but it will come like they are coming faster and faster in there, and it will happen anyways. But I do wonder if the value they bring and the service they bring, and they do bring a lot of service with unlocking capital that wouldn't otherwise be impossible to get into Bitcoin, and the financialization that you brought in, if this makes up for the negative aspects of centralizing coins, possibly being a target for 6/102, and all the things that you have mentioned, this balancing of we want Bitcoin to go up and be financialized, but also we want to have this core ethos in Bitcoin maintained. And I don't know, like, do we succeed if Bitcoin is just mainstream money, and along the way we might lose some of the core ethos? I don't know.
Yeah, we might. I mean, I think Bitcoin treasury companies are an evolving financial mechanism. And I think at some point you reach a nexus where operating companies that have positive cash flow take on that strategy. And it just eats the Bitcoin treasury companies. Maybe only a few survive in that regard. I do think it unlocks capital. I personally understand that at a very personal level with whatever money I had trapped in 401ks and Roths here in the US. And someone who works and saves and, receives company matches. I had a small pool of capital in my 401k, and I think I had an IRA. And there were things like GBTC that I looked at as how can I, get Bitcoin price exposure with this trapped capital. It worked for me. I can understand why MetaPlanet's having success in Japan, SmarterWeb's trying to do it in UK. I do question though how much capital in this how much money coming into these Bitcoin treasury companies is actually trapped capital versus retail excitement that's not necessarily trapped. And I would also encourage people to think about, if you, let's say you had some trapped capital, you have $10,000 in your IRA and you've done phenomenally well. You've done a 10, 20, 50, 100x with any of these securities. It's okay, I think, to thank those securities and pull your money. Maybe even pay penalties to get your trapped capital out of the system entirely. Or there are new products that have come along. The ETFs are here. And again, that's not Bitcoin ethos, but you could use ETFs. And you could also do self-custody in a lot of these vehicles now, especially in the United States. And Trump just did an executive order to increase the ability to buy Bitcoin in your 401k. So I think in the States, it's just your IRA. So I really see that use case. I just think right now, a lot of the fervor in this market is retail, FOMO, and not necessarily 100% trapped capital. And trapped capital sometimes gets unleashed. Japan can change their rules around spot Bitcoin and how it's treated from a tax perspective. And that reduces, the moat of a company like MetaPlanet. So yeah, it's a great question. Sorry for the ramble.
Is besides the narrative and besides maybe getting some retail folks excited about a treasury company and not Bitcoin itself, do Bitcoin treasury companies and the institutions and companies in general that they're coming more and more into Bitcoin change something like maybe the cycles, maybe like the buying behavior, or maybe whatever you want to take it?
Yeah, I think the ETFs combined with the Bitcoin treasury companies have definitely altered or are altering the cycles. ETFs are some of the people who are buying the ETF, the Bitcoin ETFs right now, are some of the smartest value investors in traditional finance. And those are strong hands, generally speaking. And we've seen this over the last, I think, year plus. Every dip is getting sort of bought up rather quickly. We're not having large spikes up. We're going sideways for a long time, minor dips, bought up right away, and moving up levels like a step ladder. So it seems like Bitcoin's it's maturing, it seems like, as an asset class. That doesn't preclude me from thinking that it can get much more volatile going forward still, and volatility can come back. But I do think that we'll see, my hypothesis, we'll see probably smaller drawdowns than historically speaking. You have to really think about already 90% plus of Bitcoin has been issued. So how much does the halvings really matter, going forward? Are they going to have the same sort of jolt on humanity when you're at 94.5% Bitcoin already emitted, and more Bitcoin is getting bought per day than is produced through mining through these treasury companies? And that'll be interesting. I do also think, though, the ETFs bring probably like this. I think we have less true price discovery. So the security markets are incredibly centralized. You can note BlackRock and Vanguard, and yeah, they're acting on behalf of their customers and they own those assets on behalf of those customers, but they know all the deal flow on probably 60 to 75% of the market because they manage the deal flow of their customers. And then the DTCC clears like 99.99% of all securities, bonds, and all financial instruments, derivatives in almost the globe, I think, definitely in America. I feel like there's a lot of, I don't think there's true price discovery in any of these markets anymore for so many different reasons, from passive investors who never turn off the buying on a monthly, or weekly, or bi-monthly basis. So I do think there's potential, or that we just haven't seen true price discovery, but at the same time, I do think it supports, the price floor. So I don't know. This is it's interesting to watch. I mean, do you think the Bitcoin Treasury companies alter the cycles?
I think price and supply and demand usually alters the cycles, and as the supply stays the same and the demand changes, the cyclical nature of Bitcoin might actually change. But I'm really interested because you said like less price discovery. Do you mean because people are just in those passive instruments, and then they just invest in like a fund, and then it just gets passively invested in, like a little bit Bitcoin, a little bit stocks, a little bit here and there, and basically people don't really pick themselves, and they just let a management or like an automatic thing do it? Or do you talk more about paper Bitcoin and the IOUs things?
I think more of the first. And so I think passive investors, imagine going to the supermarket and you bought tomatoes last week, 3 for $1, and you want to buy them again today, this week. You're going to make a salad, and now they're, $4 each. And you might think to yourself, hey, maybe I'm not going to go buy 3 tomatoes for $12 now. Things have changed. I'm going to buy cucumbers. I'll buy croutons. I'll buy red peppers. I'll change it up. But if you're, sort of a 401k investor, you're buying on an algorithmic basis whenever you're stacking, and you're buying generally so you're saying, okay, I want to buy Microsoft this week. I don't care what the price is. I'm going to rebalance into Microsoft. I'm going to buy Amazon. I'm going to buy Google. I'm going to buy the Mag 7, regardless of price. So passive investors are not looking at value investing or trying to see, hey, this stock has gone up a lot since last week. Maybe I should buy more of this other stock that have a lot of faith in that hasn't gone up. And generally speaking, passive investors, you cut your flowers and you water your weeds. Generally speaking, you rebalance out of the winners and into your losers. And so I think that leads to higher floors, less price discovery on the downside. You kind of see this with like NVIDIA or Amazon. Like anytime bad news comes out, there might be a small dip, and then the stock recovers and goes to new highs. There's no real price discovery on the downside right now. There's not a lot of short sellers in any of these markets who are challenging and pushing and pushing back on valuation models. There's very little value investors who are doing well right now. And I think a lot of that's driven by passive investing. And in essence, a lot of that is really not doing true mark-to-market valuations. So, everyone thinks, NVIDIA is trading at 50 PE right now, right? It's a $4 trillion stock. So there's a lot of people who think they're worth that much money. And if those bubbles pop or burst or come back to any sort of mean or medium historically, a lot of people are going to have less money than they thought they did. I don't know. I kind of went on a tangent there, but I think that having all the centralized forces in these markets leads to more. I wouldn't say price fixing or anything illegal, but more price coordination, more collusion, more aligned interests. Just in terms of the ETF, you're not going from even cash to Bitcoin. You're going from, generally speaking, in the system, the authorized participants are trading in and out of the ETF with cash. So it's not even in-kind exchanges. That just got approved. So I think there's that leads to more fees, more middlemen, which leads to, think about it, if you're buying $100 of Bitcoin and there's 2% of fees. So every $100 you want to put into Bitcoin, $2 goes into fees. That's less money going into the asset. So I don't know. And I think that it seems like most parties that are the biggest supporters of Bitcoin right now, like let's say the US government, is really embracing Bitcoin, which is strange if you really boil it down. But it seems like everyone's really excited about it because that means I think everyone thinks when governments get involved, these treasury companies get involved, that's people who are going to buy their bags, right? Make them rich. Oh, I forgot where I was going with that. But yeah, no, I'm sorry. I
No,
lost my train of thought.
it's fascinating because I never thought about passive investment like ETFs and all those instruments. Like if you think about from first principles, like Fiat came around and Fiat pushed people to all sorts of financial instruments for savings because Fiat is horrible in saving money, obviously. And so a lot of my friends, they have ETFs, they have some, they usually have ETFs actually as savings. Rarely people have something else outside of that. They usually have like a bank consultant. They're like, hey, like there's this XYZ ETF. You want to be more aggressive. You want to be more economic friendly. You want to like all those weird ETFs. They all have kind of the same thing, but they have a different name, a different label on them. And then they all invest in that just because the bank consultant told them to, and they trust the banks. And literally today, there's an Austrian study coming up, came out, how many people are trusting in the government institutions, and it was a high number. It was like in the 90s where people were saying like, yeah, I trust the banks, I trust the government, I trust the police and execution, which is generally a good thing for a state to have. Like, it means like the state is working fine, and I think like Austria still works okayish. I am not a fan of the EU, but like Austrian government does not do complete BS, but that's another tangent. But when we have that situation, and like before you told me, I never thought about that. We have a lot of people that just invest in these instruments and leave it there, and there's rebalancing going on. There's nobody that really says like, oh, like this is a good thing, and especially it's not your own money. You invest other people's money, and like with other people's money, you don't care that much as with your own money. This distorts the price and the price discovery. That I literally never thought about that, and it's so obvious once you see it, because like the fiat itself distorts the price signal, but fiat and the second implications with financial instruments like ETFs distorting the price massively. I'm like almost 600 episodes in, and it's the first time I thought about ETFs kind of destroying the price discovery of a free market, and kind of is a tool against the free market just because people use it really weirdly and as a savings vehicle, and they just put the money in there, and no matter what, that's really interesting. That's
Massive
why.
flows, just all algorithmically being sold or bought, and I think a lot about my recent conversation with Dave Collum and his tweets, and he's really speaking to sort of the value in the market. It just seems like it's 200% overvalued, like stocks, and real estate seems incredibly overvalued, and so you could talk about all the reasons why it's overvalued, but at some point it returns to the mean. At some point, stocks aren't going to be 50 PE. He talked about how, if you ask the average investor like what they expect out of their portfolio, they're expecting sort of like 10 to 12% returns above inflation. But if you're buying a stock at 50 PE, that's a 2% return. And there's a major disconnect there. And the other thing I'm tying into all this is like I think it's possible AI is completely overvalued and not going to deliver the growth that they want to see in the economy. And it's possible that it's actually going to be deflationary. People will lose jobs. There won't be as many new jobs, maybe, or new whatever. So let's say it's deflationary, and if people want to like, obviously, they want to, I think, kind of contain sort of that whole narrative in NVIDIA and the Mag 7. And if this bubble pops, they're praying that people only sell their Mag 7. But right now, through the things like ETFs and funds, you could just sell the whole thing with one push of a button. And that will be interesting, in a digital era when we ever get into real price discovery on the downside. So yeah, it's I think the other thing right now it's just interesting how much lack of exuberance there is for Bitcoin, this price point in US dollar terms.
I do think so too. I get messages, and I just talked about it with Sean in the morning, where we talked about we are up 87% the last time I looked with the Bitcoin price in the last 12 months, and people act like we are down 50. like people act we are in a massive bear market since 2 years, but we actually are in a bull market. We are 87% up. Yes, we are not 200, 300, 400% up in the last 2 weeks, but Bitcoin kind of changed, and as we said before, we went from like, I don't know, a jet ski to like a small speedboat to now maybe we are slowly coming to being an aircraft carrier, and at some point we will be a freaking island. We are growing, and then Bitcoin, it needs a lot of people have this price targets of, I don't know what if you have price targets, but like have this price targets of like 500,000, 1 million, 2 million, and I'm like, you know how much money has to go in there to reach those price targets, and what has to happen in order to go there. And I'm not saying it's impossible this year on this cycle. We will definitely hit it at some point, but people say like, oh, like 1 million this year, 1 million next year. I don't wish that for anyone, because I think this shows that the fiat system is kind of completely bust, and there's friends and families that we still have to save here.
Well, that's what Michael Novogratz mentioned the other day, and maybe you agree with him. Is like, if Bitcoin went to 1 million this year, which I think is still possible, not maybe likely or probable, how bad would that be for, let's say the economy? And what does that mean for the price of different things? But maybe, the price of bread doesn't skyrocket in that example. And maybe that's a way to export all the inflation into Bitcoin. And I do also think at some point, like, we kind of have to rip the Band-Aid off. Like, even if we don't want it to go quick, we don't want it to be ugly, I don't think we have a choice. I think idealistically, the longer this takes, the slower the grind up, the better for everybody. But I don't think we're assured that by any means. And I think at some point we have to deal with this, the pain in the system, or how broken it is.
Thank you for watching this video. This was only a snippet of the podcast. And if you want to watch the full episode and get all of the context of this episode, you can click right here or here. Oh, maybe also here.